Welcome to the Weekly Market Outlook with me, Tillie Allison-Harris. A lot has happened this week. Summer heat is on, and stock market volatility is high too. These wide-range swings can offer trading opportunity for active traders, but managing risk is more challenging. For longer-term investors, well, most won't even notice. Since the pandemic, volatility has increased so much. While this presents opportunity, it also presents risk. Now, as we take a look at the S&P 500 for this week, and our expectations for next week.
This is the S&P 500, the Spyder Etf, and is used for active trading and portfolio management and for longer-term investing as well. For active trading, the 60-minute chart is used to anticipate market movement intraday. And as you can see here on this chart on the right, the Friday close on the Spyder is $308.58 a share. So we're expecting the market to trade inside this range until all of these orders are filled. So as price attempts to rally to $313, there's likely to be sell orders here that will cause the market to pause, and also as prices trade higher to pause at these supply zones as well. As prices begin to drop down and retest Friday's low, there's demand here down below, 304, 307, and as those buy orders are filled, they will prevent the market from falling. When those buy orders are filled, prices will fall, and there's lower demand from $303 a share all the way down to $296 a share. So we anticipate the market will trade inside this range first and then begin to trade further outside the range. And those are our expectations for next week on the S&P 500 60-minute chart. For longer-term trading, the 240-minute chart shows supply zones at $315 a share to $313. And again, we would expect prices to struggle here before they go higher to $318 to $323 a share. If prices were to trade down lower to $306.5 to $303.5, we know that these unfilled buy orders will prevent the market from falling. And when all those buy orders are filled, prices will then drop lower to the demand zone of $296 a share to $293 a share. So for the next week, we anticipate prices to trade inside this range. And for longer term trading, the weekly chart gives us an idea of the trading range for the next few months. Just below the weekly low, there's a demand zone of $296 to $291 a share. When all of these buy orders are filled, if prices were to trade lower, there's lower demand at $276 a share, all the way down to a lower demand zone, $243 to $256 a share. So if prices were to trade lower, we would anticipate that those buyers would get filled, preventing it from trading any lower for quite some time. Up higher, should prices rally, we anticipate the sell supply zones, $331 a share to $340 a share, will cause the market to pause here as all these sell orders are filled. Eventually, over time, when all the sell orders are filled in this supply zone, the S&P 500 does have the potential to go higher. So we'll keep our eye and monitor these weekly supply zones, and that gives us our expectations for the entire month over the next few weeks. So join me next week as we look again at the S&P 500 and review the trading behavior on the 60-minute chart within these inside range zones, and then take another look at the higher time frame 240-minute chart and the weekly chart as well.